That said and done, we also have employment data that's very weak, business confidence that's very low, and that substantially offsets that effect. So in a way, the economy is so weak, it's tending to push against inflationary outcomes. I think where we're going to see the Reserve Bank operating is, first of all, to perhaps underpin a little bit of confidence in the currency, and secondly, to basically deal with any potential second round inflationary effects. So I think it's going to be very much a guarded moves by the Reserve Bank. There have been calls for 50 basis points straight away. I think 25 basis points is a more likely outcome, and then the Reserve Bank can basically play a wait-and-see game.
Yeah, what do you think that will do to the rand come this afternoon?
Well, one would hope that that it would be neutral. The money market seems to be looking more for a 50 basis point hike. For the sake of the economy, I hope not, because sharp interest rate hikes, while ultimately leading to the same destination, tend to impact inventories very hard and perhaps aggravate the situation in the short term rather than improve it. So there's no reason the Reserve Bank couldn't defer the next 25 basis points out till March.
All right, so we'll find out at 3 o'clock this afternoon. And then Anglo American announcing a boost in iron ore. This largely coming from its mine in Rio, the Minas. But then production at Kumba Iron Ore now falling. What was that? A 7% decline to 45 million tons. And then you have this possibility of job cuts. In fact, it's not a possibility anymore, is it, at Kumba?
Yeah, absolutely. I think in the case of Minas Rio, it's not really a case of trading one off against the other. I mean, Minas Rio has been a big white elephant, long in the making. Anglos are absolutely committed to it, whether they like it or not, having taken massive write-offs there. And in the case of Kumba and particularly Sishen, it's really a case now of high grading or going for high grade or reducing the size of overall operations. And unfortunately, yes, there are going to be job casualties. And the number looks like at least 4,000 in contractors and permanent staff.
And as is always with the case, the unions want to sit down with the mine, but there's not much that can change, you think?
I think management's hands are really forced. I mean, we've come from a situation where iron ore 4 years ago, was about $120 a ton. I mean, they're now nudging between 30 and 40, and I mean, 30s are, a real risk, and that seriously threatens the viability of those mines. So, no chances of avoiding that one.
We look at gold. I mean, it's fallen for the first time in 4 days after a rally. How much has that got to do with this U.S. Federal Reserve statement yesterday?
Well, sometimes gold is like an old dog that sits in the corner, and you need to listen when it barks. Yeah. It may be suggesting, for one thing, that the rate hikes were premature. It does suggest that some parts of the market are thinking that further liquidity-driven interventions are possibly going to prove necessary. I mean, certainly in the US, although it's shown some decent recovery in the last year, we've had very poor sales and inventory data. Mortgage rates are starting to look soggy again. Freight is awful. So that's not a hugely bullish picture for the States there. And we may very well see the Fed join a long list of central banks in recent years that have had to reverse initial hikes.
Yeah. I want to get, lastly, before you leave, just your impressions on Chinese stocks at the moment. To see they've fallen, and of course, again, coming from the sphere of slumping commodity prices, weak economic situation in China itself. And of course, I mean, this despite the fact that we've had so much money injected in that area.
Yeah, absolutely. I think the issues are perhaps manifold in the case of China. First of all, there are issues of trust relating to the economic data. I mean, 6.8 is supposed to be a strong number and lead to a roaring economy. On some sides, I mean, you've seen better commodity offtake in China, at least, suggesting that they're responding rationally to those substantially lower prices. By elsewhere in the globe, though, we've seen a horrendous industrial data coming out, for example, from the EU and UK. So what we're seeing is broadly a global economy that should be responding to lower prices enthusiastically increasing activity, and we're not really seeing that. So what that points us to is the fact that despite what should be a positive base, there's a total lack of consumer and business confidence. And this really needs to point policymakers in both fiscal and monetary arenas as to where they need to direct the activities. But politicians cannot place their interest ahead of the economy right now, or everyone will pay the price.
All right, we'll leave it there. Warwick Lucas from Galileo Capital. Thanks indeed for coming in.
My pleasure.
We'll take a look.